say, we didn't have that much of an effect, it was only $100,000, but now they want to see us as a
Hello and welcome to Bloomberg Quint, India's first digital live streaming business news service. I am Agam Vakil.
And I am Shraddha Babla, and today on Thank God It's Friday, we have with us Andrew Holland, the CEO at Avendus Capital. Andrew, thank you so much for joining us. You were one of the earliest guests when we started TGIF over a year back, so pleasure having you here. Okay, to start off with, India has weakening macros on one hand, and then you have excess of liquidity on the other. Which of these two do you think will have an upper hand?
Actually, I think in terms of the positives, liquidity has had the upper hand, not just for India but globally. But interestingly, I think with what the Fed has done in terms of reducing its balance sheet, okay, it's only a small amount, but we're going to tightening now, and we think that what will happen because of that is that the dollar will get stronger, particularly against the yen and the euro. I know not today because of North Korea, but also against emerging market currencies. Right. So I can see the rupee going towards 66 in the very short term. What could exaggerate that is, as we all know, there's been a lot of bond flows, not just into India, but into places like Indonesia, the Philippines. So if there's a bit of bond turmoil, you could see a lot of money move very quickly out of these countries, including India, and that could exaggerate the fall in the rupee. So then your macros start to come in. And at the moment, the macro environment just looks very poor. A lot of companies facing working capital problems with GST, huge amounts of problems. And the growth's not picking up. So whilst everyone's saying, oh, 2018, we're going to see earnings growth, sooner or later in the next 3 months, we're going to question that unless something really turns around very quickly.
Okay, so you said 18 months. Can we expect earnings downgrades then? And if yes, when?
So we've already seen downgrades for this year to virtually zero now. I think we're working on zero again. So everyone's hope is that 2018, which was ours as well, is that the economy will gradually start to pick up. We're afraid that GST has taken a little bit more impact than we're expecting, and there's going to be at least another 3 months. That is how quickly corporate India or India Inc. can pick up from there. So that's why there's a bit of a doubt now on 2018 earnings. I'm not saying there won't be growth, but the 20% that analysts are forecasting now might well start to come down. So in that environment, you've got to say, well, these valuations again still too high. So that's where we are.
Andrew, when a global picture also comes into play, what I'm trying to understand is, do you believe that Indian markets today are a lot more insulated than they were, say, a decade back in 2007, 2008?
No, you can't be, to a financial crisis, you can't be. I'm not expecting a financial crisis, but what you could see is, some fluctuations within the bond market and currencies, which will have an impact on India in the short term. What I think will happen is that, India in that environment of say, weakening emerging market currencies actually stands out a lot better than it did, say, in 2013. So it will be seen as a safe haven in terms of the markets. But valuations are so high, you can't have you be defensive and have growth tag as well, which is what India has. So I think either one or two things happen. Either liquidity gets sucked out of the system a little bit, so that kind of liquidity bubble kind of bursts, and we get a global correction along with India, and that's fine. We have no problem with that. Or the currency markets go into a little bit of turmoil, which will force the same thing.
Andrew, I know that you are interested in housing finance companies. What we've noticed is that a little bit of moderation in demand for housing finance, and of course we've also seen a little bit of demand for realty itself come off to a certain extent. Is it time to be circumspect on the housing finance sector as a whole?
No, I don't think so. I think, one, if the finance minister does any kind of stimulus, I think it will certainly be towards the housing finance sector, affordable housing, because that's part of the whole mandate of the government. So I can see more money being thrown into this, into the housing sector to help. Not just the affordable housing, but it gets jobs as well. People have to build. So I see that as being an area which I think the government will continue to focus in on. See, in the short term, prices will come down along with markets. But if you fast forward 3 years, how big is this sector? How big are these companies? And we think there's a sustainable story going forward. So valuations are a little bit high. Unfortunately, we bought a lot lower down, so you know, we can ride this one through.
Right.
Okay. I know you're not very bullish on pharma right now, Andrew, but some names, or most of the pharma stocks have seen a sharp rebound or a rally. If you see in the last, or September, for the month till date, you have Dr. Reddy's, which is jumped about 21%, Sun Pharma has risen 6.5%, DV's Lab has risen 38%, something like an IPCA also has risen 24%. So the question is, has anything changed fundamentally for Indian pharma companies, and is it time to probably relook at some of these pharma names, or you still remain cautious as far as pharma is concerned?
So on the fundamentals for a lot of these generic companies, nothing's changed. The margin pressure is still there in the US. They're still going to have to reinvent themselves. They're still going to have to change their game. And that's usually very painful and takes time. What they will have in their favor, and the same with the IT, which again fundamentally I'm not you know, very positive, is if I'm correct about the rupee going towards 66 or maybe more, then that will be instead of the headwind it's been, will be a tailwind for them.
Right.
And maybe give the management a little bit more breathing space to kind of get their act together on some of the issues that they're facing, and therefore you could see a little bit more outperformance, because everyone's going to go more defensive. So IT pharma, whereas before was not seen as defensive because we had growth problems, because of the rupee depreciating, actually will probably be back in the list of sectors that people would start to own in the short term.
Right. Andrew, what are you selling right now? What are you going short on? Something that you held and you feel that it's time to, you know, get rid of at least something partially, if not completely.
So I don't think we're of the stocks on the long side. You know, we're sticking with our themes of private banks, housing finance, FMCG, and selective autos. We haven't really changed in that respect. I mean, obviously, there's going to be, you know, sectors and companies where you've seen a good run. So, you know, so oil marketing companies, the Reliances of this world, where they've moved up quite sharply. And obviously, in any market correction, they're probably likely to take a fall. But I wouldn't be, you know, short because I think the fundamentals are bad. It's mainly because the markets are falling. You have to take some risk off the table. But our kind of shorts are going to have, or hedges will have to move away from IT and pharma, which they were. So obviously telecom would remain one of the sectors. PSU banks, where, you know, whatever is being talked about doesn't seem to come to fruition. So those would be the two sectors which would be, you know, high on the list. And then there's lots of individual stocks within sectors you can think of.
So we know which are the sectors that you really like right now, Andrew, but the question is, how does one pick stocks within these sectors, or what are those just 2 or 3 most important parameters that an investor should look at? So
let's just take FMCG, because it's a large sector with many different companies. So the way we focused our attention is, okay, we like the sector because GST is going to be beneficial over the next 2 to 3 years. You'll start to see double-digit earning in terms of top-line growth, and that filters down to your bottom line. But then if you look at some of the companies within there, so we take a Hindustan Unilever, or a Nestle, or a Colgate. Outside of India, in the group companies, you know, Unilever was approached by Kraft, so they have to get their kind of act together globally and in India. Nestle has an activist hedge fund telling them they're not doing a good job. Same with Colgate. So you've got, you know, from the group side as well, a lot of action in terms of how to improve margins and profitability, which will pay off for India as well. So you've got a few catalysts there as well.
Right. You know, Andrew, in the primary market, you have a good or a bad company, comes up with an IPO, gets heavily subscribed, the retail investors get no allocation, they're wondering what to do, lists at a premium, and the retail investors let it go to find out in 6 months later that they are trading at even higher levels than what they were listing at, or what they had listed at. What do you do with these stocks, and when can you enter?
So there's only, I think, a few stocks which actually kind of have done really, really well. A lot of them actually are probably under their IPO price.
Yeah, but I'm talking about the ones which have done well, which are good quality stocks.
So, you know, I think it depends on what that premium is on the day. If it's, you know, 20 to 30%, then that's okay. If you're thinking a lot longer term, I think the problem is this, is that when you have IPOs and you're seeing, you know, share prices move up 65% on, say, the first day of listing, there's two things that you're being told here. Either that the advisors or the bankers underpriced it by that much, which I don't think so, or too much money is chasing these things. And at some point, you're going to come to an IPO where you lose money, and that's what's going to scare people. So I think we've had one in the last few days as well.
Right.
And you know, so you're going to be very, very selective and know which ones you want to hold for a longer period.
Right.
So therefore, you don't mind paying a little bit more premium if you need to on the first day. That's when you'll be able to pick up the shares and then ride it through. But certainly on the insurance companies, which I'm sure you're going to ask me about, we're just avoiding. We just don't. We think the valuations are incredibly high,
Right.
and the numbers can be tweaked to show you a better number as well. So
Okay.
we're a bit skeptical about what we're seeing or what we're being shown at the moment.
All right. If I may ask you, what are those numbers that you feel that you may not want to believe, the numbers that are seeing some amount of tweaking?
No, so you can do it on many parameters. I'm not going to go into which
Okay,
ones,
yeah,
but in our analysis, I don't know how to value them, and they seem to be valued at either banking rates or asset management companies. I'm not quite sure, but I know they're making hardly any money.
Right.
That's what I do know, and I'm not going to pay these kind of premiums or valuations for certain amounts of. There's about 2 or 3 items which can be changed. In terms of their assumptions, which can either be positive or negative, and I have no control over.
Right. Well, okay, so I'm going to shift focus to something that we now come to know as cryptocurrencies. The concept of blockchain has been accepted to a certain extent, but there is still a lot of doubt when it comes to cryptocurrencies like Bitcoin, for example, which has seen a lot of volatility recently. How are you assessing these trends? Your comment in general.
I'm probably not the right person to ask, but I am in one respect, because I bought some Bitcoins actually.
Okay.
Not for the fact that I was trying to make some money.
Yeah.
More for the fact that it keeps me in touch with what's happening in this sector.
Right.
Because it's certainly very volatile, that's for sure.
Right.
Everyone
Right.
has certain views. And I don't know in 10 years' time whether it's going to be a currency or not, but I'd rather kind of go with the ride,
Right.
and it gets me active in terms of what's happening outside of just the normal, dollar yen or dollar
Right.
rupee. So I'm using it as an investment myself. I'm not recommending it, that's for sure.
No, yeah.
But just to really keep me on top of what the change is in financial markets.
But Andrew, you've invested in Bitcoin now, so I'm sure you must have at least thought about something when it comes to the central bank's role in the trading of these cryptocurrencies.
Actually, the reason to buy it was to make me focus on all of this, rather than I've done a lot of analysis, because I don't know what governments will think about it, or whether it'll trade. It's trading anyway without government.
Right.
The skeptical side of me will say that, will I go out and start buying things with it? But I'm a lot older. I mean, maybe you guys, a lot younger, would find it a lot easier to do that and accept it more easily than I would. So I'm not sure I'm the right, in terms of thinking about central banks, how they would look at it. So I've decided to go along with the flow and see where it goes and what comes out of it, because it's interesting.
All right, it's a Friday today, and on a very lighter note, we have a viewer question. He asks, are you happy with Manchester United's start to the season? And what do you make of Lukaku and Matic signings? I hope I got the names right.
Yes, you did. No, I mean, it's been great. We're top of the league. And 2 great signings. Matic probably the one that's tied up the midfield a lot better, which we've been needing for many seasons now. So very excited. We're scoring lots of goals. So looking forward to tomorrow evening and watching hopefully a big win, 4-5-0.
Right, at least for now, it certainly looks like Manchester United is going to go very far, considering the quality that they have.
And you don't seem very happy about it.
Well, I have no say in this, but I will admit that they do look good as a team right now. Andrew Holland, it was a pleasure speaking with you. Thank you very much for your time.
Thanks a lot.
But we're completely timed out in this edition of Thank God It's Friday. But there's a lot more coming up on Bloomberg Quint. The Finance Minister will start speaking shortly on the Bloomberg India Economic Forum 2017. So keep with Bloomberg Quint. We'll be back in just a bit.
Are we live?